In this video, I'm gonna show you the 2024 model that you can use to pass your funded challenges or make very easy daily profit in your funded accounts. So let's get right into the video. And guys, before we continue, I am streaming live and I will be streaming this model live every single day. I'm streaming London Open and New York Open. So if you want to see how I trade live and make money, see you there. So guys, this is the checklist for the 2024 model. What you're looking for is for liquidity to be taken out. So for example, we have these equal highs. You're waiting for the price to go above these equal highs and taking out this liquidity right here. Then you want the price to reverse and create a singular inverse fair value gap. Okay, so you want only one fair value gap here. And this model works on every single time frame. I will show you with some backtesting strategies and stuff like that. But let's continue. So price reverses, tick. Creates a singular inverse fair value gap, tick. And what you do not want to see is the liquidity of the opposing side to be taken out before you enter the trade. So if something like this happens, you do not enter the trade and you're just waiting for your next opportunity. So inverse fair value gap, no liquidity taken out, and enter here on this inverse fair value gap. Put your stop loss here, take profit, first liquidity, and then some liquidity even below. Now you do not want to trade this strategy at every possible time, okay? There is a reason why my streams are London Open, New York Open, because those are the most important times, okay? So these times you want to trade this strategy. So from 3 to 4 a.m., from 8 to 11 a.m., and from 1 p.m. until the market close. It's very simple. Those are the only times you want to trade this. And remember, do not push it. Like, just because it's the time to trade this doesn't mean you should just trade. Okay, you just want to chill, and then you see, you know, equal highs, equal lows. You're like, okay. Then I see, you know, the price going above. Okay. Now I have the liquidity taken out. So now I'm waiting for the price to reverse. So another check. Then inverse fair value gap here. So that's another check. And I put my limit order here and I'm just looking and checking if the price does this and enters me into the position. So if it does this, it's fine. But if it does this, I just cancel my limit order. So now let's look at some examples from the live market. So here we are, New York Open today, and I'm waiting for the price to just show me, you know, show me the moves. You can already see also the setup happening here, but you know, we are not trading that. I'm gonna show you a better example. So 9:30 open, we took out this liquidity here. So first liquidity taken out, check. Now price reversing, check. And now I'm waiting for inverse fair value gap that is singular. That means that if we have two fair value gaps like here, I do not want to enter on that. Okay, so what you want to do, and this is a tip, okay, so write it down. You want to go to a higher time frame until you get one single fair value gap. So 2 minutes, still have two fair value gaps. 3 minutes, still 2. 5 minutes, and there is the one. So you would mark this up like this, and that's your fair value gap. And now I notice there is still second fair value gap. But look, there is another tip. If there are more inverse fair value gaps, you can trade this, but it's just less probable that it's gonna go in your way. If you have one, it's very high probability. If you have more, it's less probable, but you can still trade it. And what you should do is just trade off of the lowest one. But let's go back to the 1 minute chart. Wait for our trade. Okay, and we see, right? We created inverse fair value gaps here, but it took out the opposing liquidity. So nothing. Okay. Now we are just waiting if the price reverses again. And it reversed here, then went back above, took out this liquidity here. Now it's reversing again. We see we have this small fair value gap that will become inverse. Okay, now we have the inverse fair value gap, and now we want to enter on this one. So let's wait and see if it fills out. Okay, so you go short here. Your stop loss is above this high. So this is your position. And what I like to do is just aim for simple 10 handles. It's easy as that. And you can, with 10 handles, you can pass so many evaluations. Stop aiming for like 50 handles or 100 handles or 30 handles. Just hit the 10 handles a day, 10 handles a day, 10 handles a day, okay? 10 handles a day on NQ on one contract is $200. That's $4,000 a month if you make every single day 10 handles. And with one contract only and one trade a day, $4,000. This is literally like 15 minutes of work. So do not push it. So let's see how this plays out. Now the checklist again, liquidity taken out. Here, price reverses, we can see that. Creates singular inverse fair value gap. We have this one fair value gap here. And did not take the liquidity out, the opposing. You see? It's still there. So 10 handles hit. Also, I have like 100 contracts on, but do not look at that. So 10 handles, and simple as that. Okay, let's continue. Now, one trade for the early birds at the 3 to 4 a.m. And at this time, I'm usually aiming for less than 10 handles, but like maybe 5, but you can still get 10 handles, okay? So let's see, we took out this liquidity right here. So if the price is reversing and creates an inverse fair value gap, I would look for an entry. And the inverse I want to see here on this move, not here, okay? You can go to the higher time frame. We still see many fair value gaps here. So the 15-minute one, we have a fair value gap here. So let's just wait. And now we can also see that there is liquidity being made here above and below these equal highs and lows. So we took out this liquidity now, which means that this fair value gap, basically look at the fair value gaps that took out the liquidity. So, okay, this fair value gap right here, very small one, took out this liquidity right here. So enter a short on this. And let's see how it plays out. Let me put the short. I got pretty good entry, but let's say that you entered on the inverse. Your stop loss above this high right here. Your target 5 handles or 10 handles, up to you. I like to get 5 handles and be down in the morning and then trade, in the New York Open. And we can see that 10 handles also worked out. So you guys, you can see that this strategy is very easy, okay? Do not overcomplicate it and safe trading.